Silver will probably catch up, not immediately, but at some point. And I think psychologically, the $30 level for silver holds the same kind of key ingredient that once we're at 30, a lot of the Wall Street silver crowd that came in and for the most part have held on and dollar cost average and keep stacking, they'll be rewarded psychologically. But I think it's the concerns in the financial markets, the system, what's going on with these overreach of the political class in all jurisdictions, a lot of fear and uncertainty. So it drives people into the safe harbor, and there's nothing safer on a decentralized basis than the precious metals. Any round number, especially in the thousands, is a big psychological event. So $2,000 gold in U.S. terms is a big deal. So it's got to trade above 2,000 and stay there. And once that's accomplished, there'll be a bit of a readjustment to the mindset of everyone that's in the market or going to participate in the market, meaning that 2,000 will become the floor, and everyone will think that how high above 2,000 is it going to go? Is it going to go 3,000, 5,000, 10,000, whatever? So it does set a precedence for the, let's say, rethinking the market. Silver will probably catch up, not immediately, but at some point. And I think psychologically, the $30 level for silver holds the same kind of key ingredient that once we're at 30, a lot of the Wall Street silver crowd that came in and for the most part have held on and dollar cost average and keep stacking, they'll be rewarded psychologically at $30 silver. That, okay, I bought it at 28, 29, some bought it at 30, although it wasn't there very long on the spot price. But many of these people, as you well know, Elijah, are paying 35, 36 in the case of the Silver Eagle, maybe even $40 an ounce because the premiums are so high. But again, coming back to the 30, psychologically you feel better. When the spot price was 25 and you bought it for 30, then the price gets to 30, you actually net zero on a fiat basis. But psychologically, it's moved $5 and you feel better. Well, obviously, you just said it. I mean, they're very tight, supply and a very big demand. The only reason people continue to pay a premium is because they want it. They want it now. And normally, whatever normal means these days, but in years past, when we saw these spikes, like happened in 2008, we saw $9 on the paper price and $13 on eBay, and many of the dealers that we both know were selling silver around 12 or 13, even though the paper price was $3 or $4 lower. But that only lasted for a short time. I'm going to say 2 months. I wrote an article about it, and there was an arbitrage situation going on, as you just mentioned. I mean, in fact, the local dealer here said, "Why don't you put your 100-ounce bars up on your website and sell them for 13?" And pocket that $4 delta, buy the thousands, and then convert the thousands to hundreds when the premium drops. So I said that to make the point that there is robust demand in silver to keep the premiums high and staying high. They have subsided very slightly, and I'll take some guilt. One of the programs, and there's very few that I sponsor. I don't really sponsor this one, I'm an associate of it, but this ONEX that's on my blog, you buy into part of a silver commercial bar. So you're getting it near spot. But when you convert, you could convert to the silver spot price and pay very little above that to get the silver, but that's a 1,000-ounce form. And who does that? Very few. So you take your portion of it, you've got 126 ounces, you can get 110 delivered, and now you pick, do you want silver eagles? Do you want silver rounds? Do you want 10-ounce bars? And you pay that premium. So I was encouraging people to buy through that system and wait for the premiums to come down. The premiums aren't coming down. So I think we're in a new market here, and sooner or later something's got to give. The arbitrage is for anyone that can fabricate silver to buy up as much as they possibly can and put it on the shelf at $25 and punch out, rounds at $30 as fast as they can all day, every day, till the market adjusts. So if we're looking at a system that'll be central bank digital currencies where they have complete control, then it's, well, how do you get everybody into that system? Do they voluntarily do it? Well, if you have a false flag or an actual event, could be nature. Let's say you have a big CME and it wipes out, the cyberspace for a while. Might not wipe out the world's internet connection, but let's say it wipes out a good portion of, let's say, the East Coast of the United States as an example. And it's only down for, a couple days or so. And that would be the perfect crisis. Let's never let a crisis go to waste, where I would say, well, you know what? We've got a real problem here. We've got to, beef up our ability to weather these type of solar storms. But what we really found out is we're having trouble with identification. So now what we need to do is make certain that you are who you say you are. And what we need to do is have a very, very explicit way of mating you to your financial ability to transact anywhere, internet or out in the real world. So that's the digital ID. That's the idea that it's your fingerprint, your retina scan, your blood sample, your hair sample, your fingernail, whatever. It probably will be put into a DNA database where your identity is your DNA. And once that's accomplished, they have absolute complete control, because you could be part of a corporation or a limited liability company or whatever, but your anonymity is gone. You're basically tracked, traced, and taxed no matter what you do. And I think that's the ultimate goal. So in my conspiracy hat, I think that anything along those lines, Elijah, where you would see some disruption in cyber attack, solar storm, grid down, those type of scenarios, you'll see a trial balloon, I'm almost certain, where this push for a more complete digital identity will be enacted. But so let's say that it is. Let's say that they try their just, modern money theory, and you can just print to infinity, and as long as you've got a digital ID, you're in the system. It doesn't matter how much you print. You get your universal basic income, and you own nothing, but you're happy. All right. Well, let's say that doesn't work. There's too much of a pushback. So then the elites say, okay, well, we're going to tie it to gold. You can't have the gold, but it's tied to gold, so we're going to limit the supply. It's not modern money theory anymore. We're limited by our gold pool, and it's this. All right, fine. But though at that time, all the time before, during, or after that possibility, there'll be a real gold market. And it's called the black market, but it's really the free market. And that's where people in and of themselves will make transactions in precious metals. So they'll sell their car for gold or silver. They'll rent their home for it. They'll trade for food. They'll do whatever. That's the real market. Of course, it will be possibly in the future will be not only looked down upon, but maybe will be illegal. I put those illegal in quotation marks, because it's really illegal not to settle in metal. And if you're in the United States and you're settling a debt to the state, I mean, they're not supposed to accept anything but gold or silver. So, I've often thought I should call up my tax assessor and ask him the question. Tell him I've been frauding him for all these years, and I'm really, really upset because I've been paying him in these tokenized digital receipts called Federal Reserve notes, and I haven't settled in honest money, and am I going to go to jail? But not too many people think backwards like that. But it is a humorous take on how the law has been perverted to such a degree that most people, even the Federal Reserve chairman, cannot tell you what money